Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. To start with, the Australian dollar is still being very persistent as it challenges this level of 71.90. The high today has been 72.04, so not quite broken the level. Nevertheless, the bulls are not backing away. If we do close above this level tomorrow morning in New York, this would give further concerns that the bullishness could continue on towards 72.60. So do take a little note where you keep your stop losses. If we do get a rejection from this region, then I do feel that we can get a pullback to 71.35 and down to 70.60. The euro dollar was a little bit mixed overnight as the US dollar stages a mild recovery from the level of 95.4060. In the US overnight released its weekly unemployment claims, which declined to 216,000 for the week ended in January the 4th, beating expectations of 225,000. Also, the Fed chairman addressed the Economic Club of Washington in DC this morning, and Powell said that he was concerned about the ballooning amount of United States debt. He went on to say, "I'm very worried about it from the Fed standing point, and we're really looking at the business cycle length. That's our frame of reference," he said. At present, though, the euro has struggled since the break of 114.85 figure, and at this stage still holds a bullish threat, though, due to the trend. So therefore, I don't have at this stage a strong view. Therefore, I would rather sit on the sidelines. But that being said, if we get any rally towards 116.40, I would be a seller, as I do feel there would be a sharp downturn and unlikely to sustain. As you can see recently, back in October last year, the market did stage a very significant decline. The downtrend at this stage is still holding roughly around 108.6080 for dollar yen and still poses a threat to the downside, even though the indicator from the MACD is risen slightly, but the RSI is still remaining under the midway point. Therefore, we could see a pullback towards 107.65 with the base at this stage at 106.6075. We would need to break above 108.6080 to negate this, and therefore could see a rally onto 110, but at this stage doesn't seem to be showing that kind of pattern. The pound again rejects the level of 128 and still at this stage awaits for the Brexit news. No doubt the market will continue to weigh on the support, but nevertheless, from a midway point, we haven't broken down initially. So if you are trading the pound, do be a little bit on your guard in case we get a break above 128. Now this would see a surge up to 129.35.45 before the drop. Gold takes another stab, or another attempt at least, at 1,300 and backs away. And as you can see from that, is the market is a little bit weaker. I do feel from a technical point we can still get a pullback towards the region of 1,260.70 or around that level where I've highlighted. Until we get a clear break to the top side, then I feel that the bears will continue to wear on the support. So just be on your guard. From a technical point, I'm not bearish though. I would like to see this pullback as an opportunity to buy, as I feel the market could, if it breaks above 1,300, look towards the region of 1,350 to 65. So to me, at this stage, I see the pullback as an opportunity to get long for the coming rally that may emerge very soon. Wrapping up with oil, well, since it reached its objective of $52 a barrel, I'm neutral, and I'm still waiting to see some confirmation of where the market's going. We are overbought though, so I do expect to see a slight pullback, but to what depth is still a bit of a question at the moment. So I'd rather sit on the sidelines and see how the market plays out in the next 24 hours to 48. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the interest rate report, and I hope you enjoyed the great start to the new weekend.